Right.
Yeah. Welcome to Investments Decoded. Really glad to be having Ashish of POSist with us for the first session of the summit. This is a 3-day virtual summit talking all about angel investments, and we're really glad to whoever's joining in under such circumstances as well. I must mention that the times are testing, and we're really glad for whoever's attending this summit, hopefully indoors, taking all the precautions and doing their part. Having mentioned that, would love to get started and get the ball rolling on a very fundamental session to angel investing, because we thought that besides the very technical aspects of angel investing, there should be one that clarifies all about the asset class, all about how to get started and what this essentially means, right? So, with you as well, Ashish, I think to get the ball rolling, it would be very interesting to understand from you as to how you've seen the ecosystem evolve, what your understanding of angel investment has been, and how you would perhaps clarify for us the why, how, what, as they call the golden circle of angel investing for us. So over to you, and we're hoping to learn immensely from you through this session.
Thanks, Yuvraj. Thanks for the opportunity and thanks for having me here. Thanks to Knowledge Capital and your team for this. Before I start, I'll quickly spend like 2-3 minutes to set the context and for the benefit of everyone. Tell them exactly what I have been doing, at least in regard of the angel investment, so that they can also see where am I coming from, and they can also reject if I'm talking beyond my stature. Guys, I'm founder of a company called POSist. We are a restaurant tech company. Been 9 years, celebrated our 9th birthday this February, and this is my second company. So have been an entrepreneur all along. Nobody gave me a job ever, for their own good. Started back in college in 2006. Started a telecom company. Sold that, to start POSist. My angel investment journey started back in 2015, where I actually loaned money to a friend who's a startup and who the guy I believed in. But I think I'll also tell you that there's a little bit backstory to even that loaning money and converting that to investment later, is that I've always been pro angel investing when it was not even called angel investment per se. I always believed that okay, if I have to put my money, I would rather do it in a venture. In 2012, there was a friend of ours whose company we felt was really promising, me and Sakshi, and we both were talking to him day in, day out. We were exchanging each other's problems, ranting, whatever. And this guy was also struggling, and a couple of angel investors were really giving him a hard time. And me and Sakshi talked about that, we should actually invest in his company. But we could not ask him, because we felt that because we were in the journey together, right? We were talking to the same angel investors. We were talking about the same things. So we just felt a little awkward, and we did not understand how to broach the subject. And we let it go. That company went to YC, and like 3 months from then, today they do 50-60 million in ARR. Company continues to almost bootstrap. They only raised $3 million from YC back in 2012. And since then, they're independent, doing extremely well. So I think that was the unresolved desire. And I think in 2015, when another one came, I loaned him the money to actually go to YC. These guys did not have money to fly to YC in those days. YC was not sending the flight tickets, and they were saying that we will reimburse you once you come here. So I gave him some money, and I said, you keep it. You don't need to give it back to me. Whenever you raise your round, whether YC happens, doesn't happen, it's okay. I believe in your company, your product, you. So whatever valuation happens, convert this money then on that. I don't want any sweetener. I don't want anything. So this is a no strings attached money. So that was my initiation, and that company did not make to YC, but then they continued to have a great run. Did fairly well, and from there we started that. I think for me the dope was being able to partner with the entrepreneur, right? The most exciting experience of that for me was being able to put some skin in the game, put my money where the mouth is, because all of us give a lot of free advice to a lot of individuals. Few of us also, try to put our brains, think about others, their problems, and it's always easier to solve somebody else's problem, right? So I may be in deep shit, but if Jivraj will come to me and say, hey, this is happening, I'll say, "Arey yaar, tu pagal hai, aise kar le, वैसे कर ले," because ये आसान है, सामने वाले के लिए I can dispassionately think about your problem. So I think I enjoyed that. I realized that, okay, I am focused on POSist. I cannot run two ships. So while I'm running one, let me buy a ticket in the other. And for me, it was never about return on capital only. Doesn't mean it was philanthropy. Doesn't mean that I was throwing the money away. But at the same time, the primary purpose was not to make money off that investment. Primary purpose was that if I'm able to learn, on the back of another entrepreneur, another product, another growth curve, another industry, that is going to be of immense value. So that's how it started. It's been 5 years, 30 startups so far, and it's been, I think, one of the most fulfilling experiences, for me, apart from my own journey. I've been lucky to be a part of cap tables where I don't know what entrepreneurs learned from me or I was able to help, but I can tell you that all the 30 startups continue to help me so much. Some of them even without knowing, because when they call me and they tell me what are the screw ups they are doing, more often than I would appreciate, I see myself in those screw ups, and not even in the past. Sometimes in current. Sometimes I'm like listening to someone and I'm like, okay, this sounds bad, and I'm like, okay, this is exactly what we do as well. And not only I will tell that person that, all right, you need to fix this, I will also go back and try to fix it. There have been times when I have given some gyan to some entrepreneur who actually took it to his or her heart, actually executed back and came back with some stellar results, and I felt so stupid because I've been trying to implement the same thing at my company and haven't been able to. Right. So I think all of us are struggling in our own journey at so many levels, that for me, or I think that's how I believe angel investing should be. That's why it's called angel investing. That's why it's not called investing alone. I think the angel part in this is being an angel to the other as well as to yourself, and it's a great outlet to learn, to also commit to this asset class.
Right.
And that's another point, right? I would say, my dad is a uh, pretty solid stock market investor. He's a champion. He's very Warren Buffett style approach. I've never seen his portfolio in red because he does long term investing, very detailed research. And I think because of him, I never dived into stock markets because I always felt that I will never be able to surpass him anyway. So I would rather give my money to him that you please invest. There's no point a noob trying to reinvent the wheel. But my dad has no access to startups. He envies my returns on my portfolio, right? He has started investing with me. So my view is that there's a public market which my dad kind of people can access, and then there is this startups equity as an asset class which no outsider has understanding or access both. If we as startup founders, startup operators, people who work inside startups, if we don't invest back into this asset class, I don't think we are doing justice to the opportunity which we have. So I don't know, Jivraj, if I really took up your question and answered it, but this is about me. This is about my reasons of doing startup investing and a little bit of experience I've had so far.
Wow, I think that was spectacular to hear and get started, because I think in the last couple of minutes itself, you've given us so many of these cues, right? So some of the pointers that I took up were entirely in terms of the shared value creation, right? And as opposed to looking at it from a money-making machine and having only a single objective of deriving returns, the added value that is very prevalent in the ecosystem as well is something which was very evident. However, Ashish, for the benefit of the audience as well, right? Do you want to perhaps reflect a bit on the intricacies of what is the kind of expectation from the asset class that you come into, and what kind of personas is this actually, reflected upon? Because you coming from a founder background, I'm sure founders love taking money from fellow founders, and that's a common phenomenon that we have noticed in the ecosystem, right? But to talk about a more general, broad perspective, do you have anything particular to mention as to what are the kind of personas this might be best suited for, and how should one look at it while thinking of writing their first check to begin with?
I think like any other asset class, this carries its own risks. And in fact, I will say that this is one of the riskiest asset class. I think once I heard, a very successful angel investor as well as a very successful VC out of Valley saying that he said he defined angel investing as a more expensive sport than golf. He said if golf is not burning a hole in your pocket enough, then you start angel investing. And I completely agreed with it. This he was not trying to not value the opportunity. As I said, he was a massively successful and very prolific angel as well as VC. What I believe is that this is an asset class where there are higher chances of losing your money and not really seeing it at all. There is no prediction. If somebody tells you that, oh, they can predict a unicorn or they can predict something, that's bullshit. That's a very, very big pile of bullshit. And I'm saying this while having multiple companies who have really broken out in a big way, massive returns. A company which is about to become a unicorn, a company like Unacademy, which is really going through the roof. And I had the good fortune to kind of get in very, very early, being the first check in some of these companies. But I can tell you that nobody can predict that. There is no possibility, no way one can predict that. So my view is that look at this asset class like a high risk asset class, and then match it with your appetite for a high risk investing, right? So if you're somebody who's a very conservative investor who does not want to see his money really go away and never want to see it, great. Invest probably 2 to 5% of your entire capital, which is available for investing in startups. If you're somebody who's a little more daredevil, probably you can go up to 20%. If you're somebody and if you're somebody who actually believes that you have a knack for understanding entrepreneurs, and you also have a long game at play, right? So that's the third piece, and that's actually the one I believe in. If you can actually do an investment with a 7 to 10 year horizon, and if you're okay with just being with the founder through thick and thin, if you are okay with losing your money gracefully, then you can actually go up to as high as 30 to 40% of your investable money into startups. I will not recommend somebody to buy this like a lottery ticket. Don't whenever somebody tells you कि oh मैंने इस company में इतना पैसा लगाया था 10 गुना हो गया 15 गुना हो गया, don't hear that bullshit. They are not telling you what happened to the rest of the money. In fact, what happened to the 99% of the capital. So stay away from that. But at the same time, understand that this is not the money which you are going to see in the predictable timeline. You can be lucky, but that cannot be the plan. And on that note, I will also say that spread out your investments a little, because you may have a founder, or you may find a company which is getting interest from top tier VCs. You may get a founder who comes from right kind of pedigree or right kind of experience working with good kind of growth companies. But the problem is for every such opportunity, we have enough companies who actually had to bite the dust after becoming unicorns, 100 million, 250 million, 500 million. Enough examples, right? They don't get talked about enough. So raising money or being able to raise money, for example, one of the nightmares I have is at times some fellow supposedly smart angels will come and pitch a deal to me, or rather invite me and say, I will ask them that, what do you see the best in this company? And I'm not kidding. At times I hear, यार कंपनी और प्रोडक्ट जो मर्जी हो, बट आई थिंक ये वाला जो फाउंडर है ये नेक्स्ट राउंड रेस कर लेगा. And it gives me chills because I do believe that, I appreciate that, but I don't think that's a benchmark of being able to create a successful company. So I will say, spread it out, understand the risks, embrace the risks. It will keep you from turning a devil from an angel when the company is going down. I can tell you, Juvraj, losing your money gracefully is extremely underrated. It is mind-blowingly difficult. I have gone through an experience where, in fact, multiple times now. But my first experience of losing money um, was not great. I was really angry, and I was angry because of multitude of reasons, right? Because you also have your own founder ego. I'm like, यार ये जुबराज बेवकूफ है यार, इसने यार क्या कर दिया है यार, So your immediate reaction, as if the other guy is a fool, is a natural reaction also, because one is you're losing your money, two is that you also believe that this could have been better. And it took me time to reflect. Thankfully, I did not say this to the founder. Thankfully, I was sensitive enough to not really be angry on the founder himself. But then I had to really question myself, cool down for next couple of days, and ask myself that why am I doing this? Why am I so worried? Why am I irritated? And I had to ask myself that I lost 1%, the guy lost 99. Who should be more angry? Who should be more worried? And then finally, I called him and I said, you know what? Confession is that I don't agree with what happened. I also felt that this was negligence. You could have saved 2-3 things. You might not have been successful through that, but this would not have shut down. But everything said and done, I promised that I am going to be for founder. So I'm not gonna do anything wrong to you. Um, I am going to sign wherever you want, no questions asked. And that guy, of course, he was in deep shit. I understood. And he came to me and he asked me to sign my equity at a 1 rupee value to someone, because it was a stress sale. And he was also not getting money in the process. And I said, all right. And I actually signed that 1 rupee paper. And trust me, that was some experience, right? Because I could feel the pain, but I think I grew through that experience. I also realized that, okay, ये बोलना बहुत आसान है, that I'm okay to lose this money, till the time you actually lose that money. So it's an experience which can be a little interesting. So I think take your time. What I will tell everyone is that take your time to understand the asset class. Take your time to understand that it is mighty difficult to build companies. It's very, very difficult to build business which sustains or rather grows. So be very, very thoughtful about it, and understand that if you are not playing for the founder, you better invest in public markets or property. Startup investing is not for you.
Great. I think that's very interesting. I mean, losing gracefully is a phrase that we can not just inculcate to the investing aspect, but I think for general principles in life as well. Because I think for sure, with every journey, I think, accepting loss is a huge, huge
Jivraj,
pointer. And I think that's,
losing money can make you 10x different person. Like
hmm,
money can bring monsters outside, which uh,
yeah.
which all of us may not on a normal day even acknowledge.
Absolutely. But interestingly, you mentioned about, that it's impossible to almost predict value, and that's so true, right? About the stories that we see, the media headlines, these are all with the benefit of the information we have right now. And in hindsight, none of this was available, right? And you talk about the luck aspect as well, right? So combining those two, how do you essentially, let's say, predict value to the extent that you're being able to manufacture luck? To the extent that you're eventually getting down to the decision. So instead of the traditional question of what are you looking for, and I'm sure you have great views there as well, but with context to the prediction of value, I think you'd have interesting things to tell us. Also with context to, let's say, avoiding the fact that how's an angel looking at a company or a startup differently than, let's say, a fund or somebody who's more intricately looking at it. I think those will be interesting pointers to look at.
Perfect. I think I'll take the first one. First, manufacturing luck. I don't think that. I think it'll be arrogant if I say that I know how to manufacture luck. But let me tell you how do I look at at least manufacturing the opportunity for myself. My view is, number one, that if you won't die, if a startup will not die, and if founder is not really carrying a plan B, sooner or later he or she will figure out.
Hmm.
And for you to for luck to strike you, the minimum requirement is that you need to be in the game. There may be a chance that luck will strike you someday, right? So when I look at people, I actually, one of the most fundamental, things which I look at in any new startup or any entrepreneur is one, that what is their relationship to the problem? Why are they doing what they are doing? You cannot tell me कि मैं एक दिन रोड पे खड़ा था, मेरे को ओला नहीं मिली तो मैंने सोचा कि don't do that shit, right? Tell me exactly what is your relationship with the problem. Why do you feel the pain? Don't tell me that I want to start a Swiggy क्योंकि मुझे खाना नहीं मिलता था. That's not problem enough for me, right? You have to
Mhm.
tell me exactly what is your relationship and how long that relationship with that pain is, so that I can get convinced that you want to alleviate that pain, enough. Or maybe what is your relationship with that industry? Why did you do that? Because what I know is that going will eventually get tough. You will get bored. You will get burnt out. You will wonder, what the fuck am I doing? You will have all kinds of existential doubts eventually, right? The only reason probably you will beat all of those and continue on the path, if you have an inherent relationship to the pain. If you really feel about it so much that all of these questions will come up, you will answer them, and you'll just move on, right? So that's one, right? I want to understand why are you doing this. Second is that I think that whether you raise funds, whether you have the ability to raise funds or not, you need to be a bootstrapper. Whether you bootstrap for a year or 2 years or 3 years, but you need to be a bootstrapper. I believe that large amount of money in the hands of a bootstrapper is much better than just having large amount of money in hands of just anyone. So when somebody comes to me and says, "Oh, I'm going to leave the job once I raise funding," I'm like, I wish best for you. And while saying this, I don't want to be arrogant enough to say, "Oh, जो लोग जॉब एकदम छोड़कर डेयर डेविलरी नहीं कर रहे हैं वो खराब है." I do understand that people have liabilities, they have bills to pay, they moonlight. I'm just saying that that's, for me, that's not the benchmark, right? So this is purely, opinions are purely personal. This is about how I look at it, and there are enough people who have moonlighted their way through success, and I respect them actually more than anything else, because I know they have been doing two things, and they were kind of successful at both. But that said, back to the point, I think you need to know how to bootstrap, because that also goes to your grit, your perseverance, and your ability to stay through thick and thin, because thick and thin will happen. It's not your choice. It will keep happening. Third, I look at is the product or the service, for that matter. Your understanding of what value are you providing in that equation, right? For example, if you're not able to convince me, why will your my favorite question to most of the people is that, what if you had to pitch your product at 4x the price? Will people buy? And if they will buy, who will those people be? Like, what is that persona who's going to buy? And I'm okay with people not being able to answer that immediately, but I need to know that, because I want to understand what is the value you understand you are delivering to your customer, right? So there is a difference between Lux and Dove, right? Lux is a soap. Dove is 3/4 moisturizing cream, great for your skin or whatever, right? So Dove is able to sell a commodity like soap for 5x the price, because Dove has figured out that their audience is not looking for soap to clean. Their audience is looking for some cream or achhi twacha, and they are looking for love from their loved ones, etc. Whatever that ad. So I need to know कि अगर तेरे को साबुन 6 गुना दाम पे बेचनी हो, तो तेरे को मालूम है या नहीं मालूम है कि तू किसको बेच रहा है, कैसे बेच रहा है, why will they buy, why will they not buy. Same applies to services. So for me, these are the three things. And last is that if raising money is the only motive of your life, then I think you need to get a life. That cannot be. My last question to everyone is that, what if you're not able to raise this round? How will you still look like a year from now? And every answer to this question is the right answer, except that I will shut down. So for me, you should have a path where I know so many startups who have actually built their entire product through interns. Right? May not be the best way to do it, but they have figured it out. They have done really, really well. And I'm 101% sure that the day these guys will get their hands on money, 99% chances are they'll be very thoughtful about it and they will not waste it. So for me, manufacturing luck is about getting a founder who's invested, who is a bootstrapper, who has a right relationship with the pain, understands the value they are providing to their customer, and then I am investing for a long game. I am going to be there with them for 7 to 10 years, at least, or even if they want to go longer. So I think I don't know if I can manufacture luck, but I know that we will be in the game long enough that luck will strike us, at least high chances.
Perfect, perfect. We can optimize for it, if not manufacture it per se. I think
I cannot manufacture it. I'm not smart enough yet, but yes, we can all only optimize for it.
That's perfect to hear, and I love the vigor from the audience. In fact, I would like to applaud the fact that we're getting a ton of questions, which I would definitely move on to without further ado.
Before that, what was your second question? You had a second question, right?
The second question was, in fact, in regards to how an angel looks at investments differently from a VC. Because
I'll just give you one nugget on that, and I'll definitely say, please, I'll address the angel part of the investing again. I think the only difference between a VC and an angel is not the devil versus angel difference. VCs are not devils. VCs are fund managers who have a responsibility for a very large sum of capital which they have taken from their LPs. They are fund managers who can only work with emotions till a certain point. After that, they have to give returns in hard cash. Emotions, won't be enough. As an angel, you have the liberty, and my hope is that you are not borrowing money to invest, right? So ideally, as an angel, the way you can look at a startup is for very, very long term. You can look at a startup for the right reasons. You can think about investing in things which don't have a wave for, right? For example, when we invested in Unacademy, there was no ed tech, leave alone the wave, right? And I will not really call myself a visionary then, right? Because I was technically not investing in ed tech. Right? I was rather not even investing in the founders. I was just trying to be a part of these founders' journey. Right. I knew that Gaurav and Roman, whatever they will do it with a lot of passion, and they will do something very, very interesting. I had no idea whether it's going to be a commercial success, but I knew that this is going to be massive learning, and it's going to be enjoyable. And I think whenever I got a chance to contribute, over the years in brainstorming with them, I think I learned a lot. I felt very, very happy. Whenever they benefited from it, it was extremely gratifying. So I think VC has to look at a startup purely from a return perspective. Angels can be a little more, longer term about it.
Right. It's their day job after all. So they have to do the customer calls, the due diligence, but all of that cannot be, the prerogative of the angel investor, as you mentioned. So I think that's wonderful to, a great segue to the next question, in fact, after which we'll turn to the audience questions. If we turn back time, right, Ashish, and ask you that how did you get started, and take a parallel to everybody who's listening so that they can understand how can they get started, be it networks, be it sourcing, be it evaluation, be it platforms which are very relevant as well. How would you perhaps give us a couple of cues as to what's the best form to get started, keeping in mind, the initial bandwidth that everybody might have? And of course, this will be contextual, and we'll take your advice with a pinch of salt, but would love your journey as well, and as to what you think is the best pathway to begin.
Yeah, I think one is that I don't understand anything, that is beyond network. I think, Jivraj, I can say that I have, I nurture relationships very, very well with no expectation in return. I cannot have a relationship with Jivraj today without even understanding or while thinking that Jivraj is going to give me this, because that is going to be then a very transactional relationship, and it is going to hold good only till the transaction is alive. But I do know that 5 years from now, if me and Jivraj are if Jivraj respects me for something, or I respect Jivraj for something that he brings on table, 5 years from now, one day there's going to be a pop-up, and there's going to be an opportunity which either of us will bring to each other. and probably that will give us great dividends. What we did. So my view is that if you are starting up, uh, go network, and network not with the intent of. And I think I'm going to also dice and slice this question into what kind of people I'm addressing here, right? Okay, so if you're a founder, let's start with that. If you're a founder, I encourage you to appreciate this asset class. As I said before, I encourage you to put some part of your disposable money, not to flaunt that I'm an angel investor on LinkedIn or Twitter. Don't do that shit. Nobody cares. But to actually be a part of some other entrepreneurs' journey, that is going to be extremely fulfilling. For that, pick out those entrepreneurs who you would want to work with, who you would want to join. If you sold your startup tomorrow morning, and you had no problems of money or paying the bills, which startup in your circle that you know of is an early stage one you would want to just join in as a business or a product or whatever your expertise is? Think about that. Go reach out to them today. Ask them, can they take your small money, just for the skin in the game? Be humble about it. They will take even a lakh to 10 lakh, 50 lakh, 50,000, whatever you want to give, right? Give it for the notional value. To reach out to network with entrepreneurs who are starting up. Give whatever you have to give. I'm telling you, money is actually the smallest value you can bring to table as founders. That is the smallest thing which other founder is looking for. I know जब जरूरत होती है तब बेचारा founder बोल रहा होता है कि यार आप पैसे दे दो, एडवाइस नहीं चाहिए. But advice नहीं, most of the time लोगों को कंधा चाहिए होता है. For example, unfortunately, Jivraj, you cannot tell me anything about restaurant industry that I don't know of.
Yeah.
You cannot tell me anything about POSist that I don't know of, right? But I'm telling you, कभी-कभी ऐसा होता है कि मेरे को समझ नहीं आ रहा होता यार आगे क्या करना है, right? And मेरे पास उस problem का सारा data होता है. I have the most amount of data to navigate through that problem, right? मुझे कभी-कभी सिर्फ एक कंधा चाहिए होता है. So मैं फाउंडर को फोन करता हूँ, मैं उसको बोलता हूँ कि ये हो रहा है, ये हो रहा है, ऐसे हो रहा है, वैसे हो रहा है. At that moment, I want somebody to just listen to me. I want somebody to ask me a couple of questions. I don't want answers, questions. And if those questions are like कि अच्छा फिर ये क्यों नहीं करना चाहिए, ये क्यों करना चाहिए, मैं खुद ही बोलूंगा ये इसलिए नहीं करना चाहिए because ये बकवास है, ये करना चाहिए. He'll say, all right, why don't you do that? Because मुझे ये problem है. All right, what else can you do, right? So I want to navigate that, bring that value to table. Before you invest money, become an angel investor by investing your time without asking anything in return. Don't ask for advisory equity. Your advice is not that valuable. See what your advice did to yourself, right? So don't do that, right? Invest your time. That's more valuable, I believe. Go back to those founders, create that circle. If you are a C-level or if you're a top person working in a startup or a growth company or a large company for that matter, and you want to jump into angel investing, Twitter is full of founders asking for all kinds of help in your domain. Go start office hours, start spending those 2 hours per day or an hour per day. This is slow, but eventually you will create a circle of your listening. You will create a circle of founders who either will bring their own deal to you or they will start recommending deals to you. And while recommendation, they will know who you are. What do you stand for? They will understand, right? For example, when deals come to me, most of the times people know what are they sending to me. Why are they sending to me? They already know that I may not like it, I may like it, right? This is probably, do I subscribe to this school of thought or do I not? So that makes my life really, really easy. My due diligence takes, like my CAC is outsourced to people, right? My due diligence value, money is taken care of. So I will say network. Money is overrated. Time is extremely underrated. But spend time while being in service. Just because I am calling you for advice doesn't mean that you're going to boss on me or you're going to give me strong opinions that don't, that don't do any good to me. I will not come back to you again, right? Be of service. Try and understand what can you help me in. And if you do that long enough, you will actually see deals not only coming to you. People will keep allocations for you in the cap table. People will, give you preferential treatment. You will get into cap tables which are not even in the market.
Fair. Wow, I think I could go on and on listening to this, because this is absolutely fundamentally spectacular to listen, because clarifies again. So the way you talk about value creation, right, and doing the non-scalable things, I think that's where sometimes we get the perspective wrong, right? Because we think just because the money will cut it, right, or we'll just provide decisions. But more often than not, founders are not looking for decisions; they're looking for direction, which is what, as you clarified, angels should provide. I might just want to take another moment and double down on the extent of the shared value, right? Because I think that would be interesting to touch upon and understand that beyond writing the check, right? So now that we've understood the aspect of how to get started and what to consider, once you've written the check, what does that fundamentally mean for you? And what should be the extent of value creation? And is it only one sided? And I'm mentioning that deliberately because I think I'd love the exchange of value part that you especially can shed light upon. So, with that purview, I think it would be interesting to hear your line of answer here.
Yeah, I think I will just take a step back from that. I think the shared value is not a function of what you can provide. It's a function of what entrepreneur can take. So
Fair.
I try to barge in into a startup and say कि ओ तुम्हें आता नहीं है मैं बताऊंगा क्या कर bullshit. No, as I said, मेरी advice मेरे लिए कुछ ज़्यादा नहीं कर पा रही है. Right? So it is a function of how much can you take it, right? And it is always going to be an inbound function. I cannot really call you, or I should not ideally call you and say कि अरे ऐसे नहीं ऐसे करो. So also on this note, I will also address a lot of people which I keep hearing. They will say, I've heard actually as a founder as well. Some 6-7 years back, one day somebody called me and said, "I will only give you money if I get involved with your business, because you have to understand I give a lot of value, and for that value you have to listen to me." And honestly, I was not even saying that this guy was not good. My bigger question to him was ki, sir, I have so much to take care of in my own everyday battles that I am not too sure I will be able to do justice to your great time and your greatness. So His Highness, let's not do this, and we refuse that money. So my point is that startup may, if you are putting some money, it is not going to aid your unresolved startup issues in life. आप स्टार्टअप नहीं कर पाए या फिर आपको लगता है कि आप ग्रेट हो, ये बहुत खुशी की बात है, बट ये आपकी ग्रेटनेस इज अ फंक्शन ऑफ व्हाट सामने वाला सेज यू आर ग्रेट फॉर, नॉट यू, राइट?
Not self-proclaimed.
Yes, so I think shared value in my case, if I give an example, one is that I'm the one value which I bring to table for whatever it is worth is that I'm the 2 a.m. friend to all the founders. And by the way, I'm that for any founder who works with me, irrespective of whether I'm on the cap table or not. That's not the thing, right? But for the cap table perspective, I'm the 2 a.m. friend, right? अगर आपके co-founder issues हो रहे हैं, अगर कुछ फट गया है, अगर वर्ल्ड कल खत्म हो रहा है, तो आप मेरे से बात कर सकते हो, और मैं आपको सांत्वना नहीं दूंगा, मैं आपसे आपसे बात करूंगा. I'll call your bullshit out. I'll help you navigate the crisis, if at all. Two is that I don't advise people on things which I'm not an expert on. For example, if you're an e-commerce company and you ask me a problem which I have an opinion for, I will hold that opinion. What I'm going to do is I'm going to connect you to people who actually are specialists of that, right? I don't believe in generic bullshit. I stay away from that. I also request people to stay away from it because you have a responsibility. मुझे इस बात से बहुत डर लगता है कि कोई मेरी एडवाइस मान के इम्प्लीमेंट करने वाला है. मुझे बहुत डर लगता है, राइट? सो मुझे लगता है कि जब तक मैं श्योर नहीं हूँ, and because my money is also into it, I think that is my commitment, right? So I would definitely not want to hurt you. So I think shared value is really about entrepreneurs. And if you are really worried about, or if you really want to bring that value on table, my suggestion is that you should actually not ask whether founder is ready to take that. You should actually tell them, see, this is what I do, this is what I can help in, this is what I want to learn from you, and I would want some sort of feedback from you also on that, and take me up on this offer whenever you want. If a founder is able to take you up on that offer, super. If not, it's okay. That means founder is either fighting their own battle, or maybe that area is not something which is of priority to them.
Fair point. Fair point. So, clarifying the fact that you don't have to be forced to create value out of thin air, just has to be very organic nature, on a need by need basis, not demanded by you, but demanded by the founders as opposed. So I think that's a wonderful thought again. Jump into a couple of questions from the audience itself. Sarthak Rastogi asks us, how does a beginner angel investor go about creating a safe portfolio, at least for the first few investments, and how to gauge on the risk appetite? So considering that this is not high risk seeking person, if you had to perhaps give us an opinion as to how to.
My blunt advice will be don't invest in startups. And there is nothing called a safe portfolio. Okay. And I will not even say that your question is wrong, right? I think all of us want to make sure that we are not throwing our money away. But there is nothing called safe portfolio. Safe portfolios are always in hindsight. 5 साल बाद आप पीछे मुड़ के कह सकते हो कि अरे मैं चैंपियन हूँ, बकवास है। जब हो रहा था तब किसी को कोई आइडिया नहीं था। अभी भी आज भी मैं जिन कंपनीज में इन्वेस्ट कर रहा हूँ, बहुत ही फनी है। मुझे लग रहा है ये अगला यूनिकॉर्न है, उसको लग रहा है कि ये आशीष मेरे को इन्वेस्ट कर रहा है, तो आई एम श्योर मेरे अंदर तो कुछ होगा, जबकि फैक्ट ये है कि हम दोनों को कुछ आइडिया नहीं है। मेरा होप है कि उसको अपने स्टार्टअप के बारे में पता है और उसका होप है कि मुझे उसके स्टार्टअप के बारे में पता है। एंड दैट्स ऑल, राइट? सो देयर इज नथिंग कॉल्ड अ सेफ पोर्टफोलियो। एज आई सेड, I think the safest you can go with your portfolio is invest your time, be in service, understand the entrepreneurs before you invest. In fact, figure out what kind of small help you can volunteer for. It can be research, it can be some work, it can be reach outs, it can be anything. Do business development for them. Ask them कि तेरा सबसे बड़ा विश लिस्ट कस्टमर कौन है और उसमें किस आदमी से तेरे को मिलना है, मैं लिंक्डइन पे कोल्ड अप्रोच कर करके तेरे को लेके आऊंगा, राइट? उसमें यू विल नो कि उसके प्रोडक्ट की एक्चुअल वैल्यू क्या है, यू विल नो कि फाउंडर की वैल्यू क्या है, यू विल नो कस्टमर्स उसको कैसे देख रहे हैं। अगर कस्टमर प्रोडक्ट के बारे में सुनते ही इमीडिएटली मीटिंग देता है और क्लोज कर लेता है, तो सेफ इन्वेस्टमेंट है यार। मैं तो बोलूंगा उधार लेके लगा दे। So my point is that there is nothing called safe portfolio, but in case you still don't believe that you would want to never see that money again, I will say till the time you reach that point, don't invest, or slice out that money which you don't want to hear from again and put that, stay for a year, see how the trajectory goes, and probably I can tell you one thing, Sarthak, some of the companies I invested in thinking they are going to be home runs, they are still trying to hit the ball. Right? So, and with no fault of the founders. I mean, there are 20,000 things that can go wrong and may not work. So it's okay.
Fair enough. That makes me remind of the fact that I think Naval says this, right? Angel invest and forget about your money, and that's how safe it gets, I guess, in angel investing.
Because if you will remember money, it will give you a lot of pain. So
right.
Yeah.
No, but fascinatingly enough, Ashish, when you were just answering that, it just struck me that, the glamour around, let's say VC funding in general and angel investing in particular, right? We see these headlines that a couple of angels invested in this company 5 years back, it became 100x and whatnot. While those outcomes are of course possible, if you had to break down the glamour around and give us a very grounded reality of what the expectation should be from investing into startups, I think that would be really a core to the starting initial point, right? Because if we go into, again, goes back to the first question as well, but understanding the managing expectations bit as to what do you essentially get in with, what's the mindset that you should go in with, and what are you expecting a decade later is what I'd love to understand.
I think, Yuvraj, I'll probably, I have nothing more to offer in this question. I think I've been continuously saying that play a long game. 7 to 10 years horizon is what I'm talking about, and I can give some perspective on this. Okay, for example, out of my 30 investments so far, I've got exit from 4, and all these 4 were full exits. That means the startup got sold. 1 shut down, 3 were sold. I have not really taken money out from any. And I've got multiple offers to get secondary exits. Some of my fellow angels also told me that you're foolish, for not taking it. And I do agree, by the way. There are times when you wonder कि हाँ थोड़ा hedge कर लेना चाहिए. बट मुझे लगता है कि वो मेरा भी अभी लर्निंग कर्व है. मुझे भी ना और 5 साल बाद तुम मुझसे पूछोगे कि पीछे मुड़ के देखो तो क्या लगता है, तो मैं बोलूंगा कि यार वो वाले स्टार्टअप में 10x मिल रहा था, आई वॉज ग्रीडी और आई वॉज स्टूपिड, एंड मैंने सोचा कि ज्यादा लंबा रहेंगे तो और मिलेगा. But in all honesty, I will say that if you're playing a longer game, in the long term, we all will be dead. No, in the long term, you'll figure it out, right? So in the long term, you'll be able to get better returns on the overall portfolio. I don't think one startup or two startups are really going to make and break for you. For the glamour piece, I will say यार बहुत ही funny है. Entrepreneur ग्लैमर फील करता है वीसी से पैसे लेके, और एंजल इन्वेस्टर ग्लैमर फील करता है स्टार्टअप को पैसे देके. दोनों ही बकवास हैं, दोनों ही फेक हैं. अगर उन दोनों से आपका कुछ फायदा होता हो तो यूज करो. जैसे पीआर और मार्केटिंग के बारे में मेरा एक ही ख्याल है. इफ यू नो व्हाट आर यू हिटिंग विद इट, प्लीज यूज इट. एंड इफ यू आर अ लूज कैनन हु इज डूइंग पीआर बिकॉज वो फैमिली के व्हाट्सएप ग्रुप पे और फेसबुक पे कॉन्ग्रेचुलेशन चाहिए 200-250, quite a bar is quite low for you then. I don't think that's going to help you, because you will actually become even more careful about losing later, right? I think as entrepreneurs, one thing which we have to continuously nurture within ourselves is continuous enlarged appetite to fail while continuously trying to win. I'm not saying failure is good, right? But as we are continuously trying to win, we should keep nurturing the appetite to fail, right? So and जब आप बहुत ज़्यादा when you're projecting beyond your stature or condition, and you're getting a lot of applaud for some trivial stuff like investment in your company, I think that just takes away that opportunity for you. You become really, close. You don't want to lose in public again because you got accolades in public.
Right.
But ये थोड़ा ज़्यादा philosophical भी हो गया.
Philosophical.
तो सुनने
No.
वाले इसको रिजेक्ट कर सकते हैं अगर पसंद नहीं आया.
No, I think it's lovely to hear. These wine liners are something that definitely everybody's going to take back, right? The appetite for failure, as you mentioned now. And I love the candidness. I think you've been completely honest, candid, laughable with us. There's another question from Kartikeya Jain. So interestingly, he asks, would you invest in a founder and startup having an amazing business and metrics, but having an exit plan already set? So putting you in the tough spot there.
Yeah, why not? No, absolutely. I think Karthikeya, right?
Yeah.
Karthikeya, if you would have asked me this question probably in 2015, I would have given you a very bad answer for it. And I don't know if the one I'm giving you today is smart enough or not. We'll see it 5 years from now. But yeah, I think मुझे ऐसा लगता था किसी ज़माने में कि exit plan is for losers or whatever. Right? It's not. It's really not. I think एग्जिट प्लान को थोड़ा सा डाइसेक्ट करता हूं मैं, एंड दिस इज अगेन माय ओपिनियन, प्योरली माय पर्सनल वे ऑफ लुकिंग एट इट. आई थिंक अ स्टार्टअप्स duty, or rather what they are trying to work for, beyond the romance, the passion of the founder and the pain, and how you want to dent the universe or you want to fix the world, the primary responsibility also is to create value for all the stakeholders. And stakeholders are not only investors. Stakeholders are founders themselves, their employees, their customers, even their vendors for that matter. Startup ka dhanda badega to vendor ka bhi dhanda badega, right? And then comes, at the end, comes investors as well. And if somebody has an exit plan which is not gaseous or gimmicky, तो सपोज आज आप मुझे आके बोलते हो कि आई हैव दिस प्लान एंड आई एम गोइंग टू पुट मनी इन, इंक्रीज द नंबर ऑफ ऑडियंस, हैव बैड मेट्रिक्स, and then I will sell it off to some unicorn that I believe will buy, bullshit plan. But because in your question you asked if it's a good business and good metrics and an exit plan, will I invest? 101%. I don't think it's a bad idea at all. In fact, I do believe, and I'm saying this, as an entrepreneur as well. Everyone should have an understanding of what their exit plan is. Having an exit plan does not really mean that you are trying to exit. And I'll give you an analogy for it. It is exactly like buying an insurance. everybody should buy an insurance. Not does not mean that you're planning to die.
Right,
Right?
right.
Similarly, you should have an exit plan. Doesn't mean that you're trying to exit, but you should have a plan. You should have an understanding of what it will look like.
Fair point, fair point. Let's hope this phrase and answer in itself ages well for the next decade. And be moving beyond that, right? So there is an Ajay who's asking, what are the fundamental parameters to decide which founders to back? And to top it off, right? Given that you've invested in a couple of legendary companies and you yourself are building a legendary company yourself, what do you think separates the special founders, or what are you essentially thinking before you take that first meeting? It's something that I think would be very helpful for everybody trying to and evaluating founders per se.
I think great question, Ajay. Again, this is personal. This is my opinion, and different things work for different people. What works for me is, what I've seen, founders who have done well. If I look back, these 30 companies I've invested in, and also the companies which I did not invest in, and I know of, I know their trajectory. I think founders' obsession with quality on the product or depth in the product is a very underrated skill. I feel extremely nervous and bad when I ask founders कि आपके कैपिटल पे जो ये एंजल इन्वेस्टर्स आए हैं, इनमें से कितने लोगों ने आपके प्रोडक्ट का डेमो लिया. And trust me, 99% will tell me that these guys did not take a demo. They took a 1 hour call, asked TAM, market size, who will exit, what if Google enters? What the fuck are you talking about? Like, what are you asking, right? See the demo, right? Take a demo, go on a client call with them. Nowadays, everything is on Zoom. You have brilliant opportunity. Be a ghost on the call. Just listen to that real conversation. Ask them that it's better than your 1 hour of bullshit of going through the deck कैसे बनता है ये हम सबको पता है. आप खुद उसको बुलशिट बताने वाले हो. वीसी को कैसे पिच करना है अगले डेक में, राइट? आपको पिच करने के लिए भी किसी और ने उसको बुलशिट बताई थी, तो उसने वही सब लिखा हुआ है उधर. So my point is that one, obsession with the product, obsession with the depth of the product or the quality. Second is that look at founders who have a sales DNA. बेचना बहुत important है. I believe that a lot of startups bite the dust because they did not sell well. They did not sell at all. ये जो tech crunch पे और उल्टे सीधे blogs पे हम पढ़ते रहते हैं ना, you build well and they will come. No, that's bullshit. No, nobody comes. They will never find you. They don't have time to find you. You're not important. But if you are somebody who understands how to sell, who really is focused on sales, you will get a chance to actually wash away your sins. So I look for these two things. May not be in one founder, may be in the team overall, but I do look at people who value product and sales equally, or at least give that priority. I stay away from people who, when I ask them कि सेल्स कौन करेगा, they will say कि हाँ वो तो सेल तो हो जाएगी. या फिर अगर वो बोलें कि प्रोडक्ट में क्या करोगे, and they will tell me कि how competitor is having more features, that's a deal breaker for me, because features is not the problem. Competitor is not your benchmark. Your benchmark is still the customer. This can sound like a cliche, but trust me, in my own journey of last 9 years of POSist and before, I don't think I have been able to find another way, another North Star, which was constant, which was really a North Star. Everything else moves. Competitor moves, wave moves, market moves, customer and the problem remains same.
Fair enough. So the foresight part of how a founder actually can look at his journey, his product, and the sales aspect. Love that evaluation aspect as well. I almost didn't realize, and this does not feel like an hour worthy of a conversation, but we've almost segue into the last question, and without making like a typical stereotypical ending, I'd love if we can take it a flip side, right? So instead of final learnings from your angel investing journey, can you perhaps ponder a bit upon the strict, if not strict, do nots of angel investing, and Fair enough, acknowledgement. Ashish has an amazing YouTube video on this exact pointer. But beyond that as well, Ashish, if you have any no-nos as an angel investor, I think that would be spectacular to reflect upon and bring that to the close of what has been a spectacular session.
Okay, Jivraj, I'm gonna try and count a couple of top no-nos, on top of my mind. One is that if you're an angel investor, please don't ask questions like VCs. Please don't. Don't talk about कि वो Google आ जाएगा तो क्या होगा, तुम्हारा टाइम कितना बड़ा है कितना नहीं है. उसका टाइम इसलिए छोटा है क्योंकि उसके पास पैसे नहीं है, और अगर उसके पास पैसे होते तो वो तुमसे मांगने नहीं आता. Right? उसके पास पैसे कम है, but they are not stupid, right? So TAM is going to be a function of sometimes TAM is also a function of my ability to throw my net in the market. At times, if I will get more money, I will be able to think beyond the market I'm looking at, and probably adjacent markets will happen as a function of it, right? So I will say that don't do that. Don't be like VCs. Don't ask the same questions. Two, don't ask for advisory equity. Please don't. आपकी एडवाइस उतनी वैल्यूएबल नहीं है जितना आपको लगता है. Please don't. Three, don't ask for those sweeteners to lead the deal. Don't try and arm twist them for some of those basics. You may feel that you are winning today. Trust me, in the long run, you will lose, and you will lose heavily. I know so many investors who probably 6-7 years back were popular enough, had enough money. They should have been the most popular people on cap tables today. All of them don't exist today. All of them. They are right now fishing deals through some of the randomest deal networks, only because no founder who took money from them ever invited them again. Don't do that. Play a much longer game. Be with the founders. Don't be stupid about this. Fourth, I will say is that sorry, I lost the train of thought. Last, don't worry about valuation. I feel very stupid when I hear angels discussing कि वो उसकी valuation ना 3 million है या 5 million है या 10 million है, वो मेरे लिए महंगा है. What महंगा are you talking about? You're investing this tiny amount of money, like this tiny. It is not even going to move needle. And जब आप plan सुन रहे थे, तो आपका मानना था this startup will become 100 million, 250 million, billion, right? You are rooting for a billion, and your entire negotiation is that valuation को 3 million नहीं 2.5 million कर ले. How does it matter, right? अगर वो startup actually billion हुआ, तो उससे कोई भी number multiply करोगे, you know what is the beauty of billion? You multiply any number with it, it comes as the right answer.
Absolutely.
So don't be fussy about valuation. That's not your job. Your job is to help the founder maximize their valuation. Doesn't mean that you also ask them to jack up the valuation, right? Give them the opportunity to see for their own self. If you are not interested, let me also give the answer. If you're not interested, if you feel somebody is costly, tell them no. I'm pushing them into that 500,000 or 2 million discount is not going to help you or the founder. Don't do that. It hurts everyone on the cap table, including the founder. So those will be my absolute big no's.
Wonderful to hear that. I mean, the exact clarity of being able to focus on the fundamentally important things and negating the inconsequential ones, to not fuss about them, is spectacular to hear. Ashish, this has been such a wonderful pleasure for me. And I'm sure with the reactions that we've gotten from the audience as well, this has been a treat for everybody to hear. I think we've learned all about, the fundamental basis of angel investing through your journey, which seems spectacular. And we thank you for, in fact, playing such a marvelous role in building the ecosystem. This was the first session of what is going to be a marvelous summit ahead. We have the next session on sourcing deals. So thanks for everybody who joined in for this session and for contributing to questions, contributing to your comments and everything therein. This was an absolute pleasure. We'll see you on the next session. Thank you so much, Ashish.
And I'm also looking forward to great sessions that you have lined up. So, thanks a lot, everyone, for listening. And in case you found any value, today, tomorrow, feel free to ping me on Twitter or LinkedIn. We'll be very, very happy to hear from fellow founders, angel investors, future or now alike. Thank you.
Thank you so much, Ashish.